This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Austin Kimm. Austin is the Director of Strategy and Investments at Choise.com, which is a solution that combines elements of both centralized and decentralized financial solutions within a single marketplace or platform, I suppose. Welcome to the show, Austin.
Thank you, Andy. It's good to have you.
It is good to have you, sir. We'll do what we do at the beginning of the show. Austin, I'll invite you to please introduce yourself. I suppose I'd love to just hear a little bit about your professional story and what you've been doing in the lead up to being involved with Choise.
Okay, thanks, Andy. So I'm based in Scotland these days, but I've traveled a lot over the years. So I would say that the formative years of my career, the first 25 or so, was all insurance. And until 2012, I was running insurance companies. So I've set up and I've managed some pretty large insurance groups. And the last one I was doing, actually probably quite unique in this space, I set up an insurance group for both Russia and Ukraine combined between 2006 and 2012. And by the time I left, it was, quite a nice operation. Unfortunately, of course, things have changed since then, but the insurance business in Russia is still going very strong. And then after that, I decided 25 years of insurance was quite long enough. It's a solid profession, but it's not the most, let's say, dynamic. And cryptocurrency and a few other sort of more interesting things came along. So in 2016, I really started to get into the cryptocurrency space. And together with a number of colleagues, we set up what was called Crypterium then, but now Choise.com, which was the intention to set up a cryptocurrency bank, for want of a better phrase, when at the time when cryptocurrency was sort of the Wild West. So yeah, that's a quick introduction for me.
Very nice. Thank you, Austin. And yes, I did see that, Choise.com, it's not necessarily a new platform, as I think you've alluded to. It's evolved over the years, which of course is, well, that's how business works. And certainly it's how you need to evolve in the crypto space because it moves so quickly. But yeah, I can imagine that in 2016, even 2017, Crypterium would make sense as a brand, perhaps less so in 2022 though.
Yeah, absolutely. So back in 2016-17, I mean, I guess many of your listeners, know the history even better than I do, but really you couldn't buy crypto, you couldn't sell crypto very easily unless it was almost on a street corner, and you certainly couldn't spend it. So a lot of people were asking the question, what is it? What can I do with it? So in 2016-17, the question was very different than the questions that people are asking today. So when you set up a business, you try to set up the business that you think is the key question, and Crypterium as a name seemed to go, fit perfectly. And so, as I say, we set up initially with the focus of how to solve the question of make it usable. How can I use it in a supermarket, or how can I send it to my friends, and what purpose is it? And actually, when we set up, it sounds a lot easier to say it than it was. In fact, our first CEO, for example, was an ex-CEO of Visa, UK and Ireland. So, a very prominent figure in the payment space. And for the first 18 months of our company's sort of lifespan, it was not possible to do the things that we were setting up for. So as a consequence of that, we started to expand the vision a little bit. Well, if we're going to do payments, then we have to do wallets, and we might as well do savings accounts, and we should have an exchange. And before you know it, you've built up a full suite of products. And then eventually the Visas and the MasterCards, they come on board, and they suddenly start to say, actually, there's some value in this. Maybe we should help out. But, in the early days, the vision was very difficult to actually deliver. And as a consequence, you sort of start to add to that. And then once the vision sort of gets all pulled together, you end up with a package that was not what your original intention was, but hopefully is still satisfying the needs of the people.
Yeah, very good. Austin, tell us then, you said you started, Crypterium was intended to be a crypto bank, and looking at choice.com, I can see that is still very much the case, I suppose. But I can see on the choice.com Twitter, you describe it as the leading MetaFi ecosystem, which maybe that's just like a catchy Twitter hashtag marketing phrase. I'm not sure. It's a new one for me, but I always enjoy it when, another one I've seen a lot recently is CeFi. But everyone has their own take on these things. But look, well, tell us how you kind of describe Choice.com at the moment. What is it?
Yeah, so I think the word MetaFi, we played around with that word. I think that the biggest question and the biggest issue that the cryptocurrency industry hasn't actually answered is how do we make it simple for the average person? And we have these phrases, we have TradeFi, we have CeFi, we have DeFi, and now we added another word, MetaFi. But ultimately, it's just trying to say that, it's all things in one package, whether it is CeFi, whether it's TradeFi, whether it is DeFi, and they all have slightly different meanings. So we just try to package them together, but none of them are really very helpful to the average person. And I think that's one of the issues that the industry hasn't yet resolved. And what we try to do is we try to simplify things. So let me give you an example. I think most people understand the basics of what a savings account is. They understand that they put money into a savings account, the bank borrows that money, they lend that to somebody else, and they get an interest rate on it. That's, but they don't really understand what the bank does with the money once they've got it. They just know that they put it to work. So people understand savings accounts, but in the crypto industry, we all sort of think we're very clever. So we introduce words like staking and farming and liquidity pools and hash rate mining. And it's very, very complicated to understand for most people. So we're probably not helping by using a word like MetaFi, but we're just trying to say, all in one space. Look, it doesn't really matter whether it's centralized finance, whether it's decentralized finance, whether it's traditional finance. In one space, we're trying to deliver, that whole package for customers, and try to do it once you're inside the solutions in a way that's very intuitive. So, for example, opening a savings account is called a savings account. It's not called a decentralized earning pool, for example.
Yeah. I'm sure that does help. So essentially, people can use choice.com. They can buy crypto, but they can also, I suppose, hold or store their crypto there and potentially earn some interest on their holdings, right?
Yeah, absolutely. I mean, there are something like 30,000 cryptocurrencies out there now, and there's a new 100 almost printed every single day. And of course, most of them are junk, but there's there's a lot of, let's say, good quality cryptocurrencies out there that have a lot of use cases, and people like to own them. So I only own maybe 5 or 6 different cryptocurrencies, but somebody else might own a different 5 or 6. So you have to sort of cater to quite a large package and sort of range of solutions. So if you're a bank, you open a sterling account, you might have dollars and you might have euros, but you don't have 75 different currencies. And that's what cryptocurrencies, have to sort of compete with to some degree, and that those 75 currencies all have to be tradable with each other. And then there's another, as I say, 25,000 of them out there, which some customers would also like to see inside the wallet. So yeah, trying to simplify it and do it in such a way that if you own it, you can put it inside our wallet and then you can trade it. You can exchange it for a different cryptocurrency, or in most people's cases, you can actually trade it for traditional money and spend it on a Visa card. I think at the beginning, that's what we thought cryptocurrency was primarily going to be used for, that it would be a replacement for traditional money. In reality, that's not happening very as quickly, let's say, as people thought it was going to happen. Now, yes, you can spend cryptocurrency today much easier than you could a few years ago, but most people are still not doing that. And actually, what most people are doing is they're owning cryptocurrency with the intention of trying to make money out of it. And that's actually quite difficult to do if you don't really know what you're doing. And most people aren't traders. Most people don't read, every piece of news that comes out and don't really follow the sort of the key press that would determine whether or not they're going to make money or not. They just follow, the pack. So for most people, you need to bring it down a level and just say, no, here's an easy way of earning money, guys. You just open a savings account, you'll get 7%. We'll do certain things for you. And at the end of the day, you're earning money on something that previously you couldn't earn money on. So yeah, that's the approach that we try for.
Yeah, very good, Austin. And I saw a tweet yesterday talking about how effectively two of the biggest let's say crypto hedge funds in the space that on paper or on at the surface level appeared to have every advantage possible in terms of they had knowledge of order flow, deal flow. They had the highest possible level of connections across the industry, and they participated in a full crypto bull market cycle. And yet those two hedge funds, and I'm really talking about Three Arrows Capital and Alameda Research, is that what they're called? Alameda. They both still managed to blow themselves up. So it's just, I'm being a little bit facetious, but it just goes to show it's not actually as easy as people think to make money trading crypto.
Yeah, I think there's several issues at play here. First of all, I'm going to be pretty simplistic and bring it back to regulation. Regulation in the cryptocurrency space is 5 years behind where it needs to be. And I think that's an inevitability of anything that grows as fast as we have. As I say, in 2017, you couldn't even really buy it. But now MasterCard, Visa card, they've probably got 200-300 programs where you can spend it on various cards, etc. So that's the speed we've moved. And the valuation of cryptocurrency went from a few hundred million to at its peak last year, sort of 3 trillion. So it grows at such a space. And the biggest problem with the regulation side of cryptocurrency is that crypto is global, unlike a traditional bank. And what would normally happen with a bank is, they open a bank in the UK, or they'll open it in New Zealand or wherever, and they will focus on that market. And once they've done 5 or 6 years, they will gradually expand. Maybe from New Zealand, they'll move to Australia or something, but they don't go global instantly, whereas cryptocurrency is global instantly. And it's grown at such a pace that it's impossible for regulators to keep up. And secondly, regulators are only really concerned about their own citizens. They're not concerned about the UK regulator doesn't care what happens, for example, to the New Zealand customer at the end of the day. They only care really about their own sort of jurisdiction. And what happens with these type of environments is, for whatever happens in one market, there's another market with a completely different set of rules. So in the US, for example, it's really unclear as to what you can and cannot do. And with the US being such a big market, that means companies open up in the Bahamas or the Cayman Islands or somewhere where the regulations are much more relaxed. And because everything is in an online environment, it's pretty impossible to stop it. Whereas I used to have to go into a bank and open an account. Now I can just, click onto a button and end up with a wallet in the Cayman Islands. So that's problem number one. It's very, very difficult to sort of regulate and control it. And that will change, but it's still several years away. The second problem is the industry isn't actually that big yet. I mean, it sounds big when you say 3 trillion, but relative to other markets, it's actually not that big yet. So when money is moving around, I liken it, as I mentioned, my background is insurance. And in the 80s, Lloyd's of London, which is a sort of name most people will know, hit a huge problem in that insurance companies inside Lloyd's were insuring each other's risks. And then once they've insured a risk to somebody else, they then might take a little piece of that risk again later on down this spiral of risk reinsurance. And what happened was, when a major event happened, everybody was affected, but they were affected by a much bigger degree than they thought, because they thought they were only on the risk for 1%, but actually it finds out through taking bits of other people's risks, they're on it for much more. And that's pretty much what's happening today in these big funds. There isn't actually that much out there to generate all the returns everybody thinks. So they're all taking a bit of each other's pie. And, you know, Genesis will lend money to Alameda, and Alameda will lend money to Three Arrows, and it goes around in some circle. So when one domino falls, it has a potential to knock a lot of dominoes. And this is the interesting conundrum that the industry is facing. Small is not that difficult to make money. You can easily do arbitrage trading, for example, where you can just spot that there are price differences between two exchanges, and clever computer programs can make money out of that. But you can only make a certain amount of money. And once you start getting too big, that type of logic doesn't work anymore. And of course, you can make some money by doing loans, etc. But again, once you start getting too big, you start taking bigger and bigger loans and bigger checks. So it is a difficult space to be in right now if you're trying to generate returns and trying to deliver positive value. Because although it sounds big, it's actually not as big as it may sound, in that $1 trillion is not that larger a sector when you compare it to, say, what goes on in the traditional banking space. So I don't think we've seen the end of those type of problems. One of the major exchanges was taken down in 24 hours in the last 2 or 3 days. And it took everybody by surprise that how quickly something that was worth $30 billion one day, the next day is effectively bankrupt and worth nothing after just a few tweets and what you would call a traditional bank run. So yeah, it is difficult. And what we try to do, sorry, to bring it back to what Choise.com does, but we try to avoid that. And we've created a marketplace so that we don't package it all together in one big lump sum. We allow customers to effectively pick and choose individual savings options that are being offered out there. So it might be a 5% return or a 7% return or something, but it's not being packaged. It's very specific to a particular use case. And I think the lack of transparency is one of the biggest things that's really affecting our industry right now.
Yeah, I could not agree more, Austin. And one possible, it's not a solution, but one thing that could certainly help is for big exchanges, especially the Binances, the Coinbases, the FTXs, Gemini's, Kraken, those kind of global exchanges, if they offered some kind of on-chain proof of reserve. And you can see that CZ at Binance has talked about that. I think they're going to implement that very soon. Pretty sure Brian at Coinbase has said something similar. Obviously, Coinbase, a little bit different. They play it a little bit more by the rules compared to some of these opaque international exchanges. But it's the oldest lesson in crypto, as you'd be very all too aware, Austin. People say, if you're keeping your coins on an exchange, then you're just taking on the risk that the exchange is going to be doing who knows what with your coins. And just because you can see some coins in your wallet on an exchange doesn't necessarily, as we've learned, doesn't necessarily mean the exchange has saved those particular coins for you.
Yeah, absolutely. And if you just go back to my point about the regulation, if you look at the fall of FTX, in that, from what I understand, you've got FTX US and you've got FTX Global, and FTX Global is the one that's basically just been pulled down. But FTX US, because it is regulated in the US and it has to effectively do what you've just said, match its liabilities and assets, on the same balance sheet, and be able to prove it. Whereas FTX didn't have to do that because it was in the Cayman Islands, the Bahamas. I forget which one. It doesn't really matter. The point is, it's so much easier to do business outside the US, so everybody does. And then the customers are the ones who are being punished because the regulations are not really sort of helping customers in this. They're basically protecting themselves from when things go wrong. But at the end of the day, most of the US customers are using FTX Global. It's because they had better services, better fees, wider range of solutions, etc. So 93% or something of all FTX trading from US citizens is actually to FTX International, not FTX US. And it really is, we're going to have more of these. We've had 3 or 4 already this year, and we're going to have more. But I don't want to sound all doom mongering. I mean, this happens in every industry that's connected with finance at some point. You know, the big players eventually swallow up the smaller players. A lot of the smaller players default and they fail. And unfortunately, this is just being paid out, in a very public space right now. But I don't think we're seeing anything that's fundamentally different than we've seen before. I mean, how many banks probably were there 100 years ago, and how many big banks do we have left now? It is the same we're going to see with the exchanges. There's probably 300-400 exchanges, but in 3 or 4 years' time, are you going to have your money in some exchange you've never heard of and operating out of some country that you have no idea what the regulations are like? Probably not. You're going to have a Coinbase. You're going to have Binance, probably, although Binance is still operating outside those rules. But you're going to put your money to the biggest players on the hope that they're too big to fail. But at the moment, unfortunately, they're too big to fail. They're not yet big enough, obviously.
That's right. I'd love just to get your perspectives. You've talked about it a little bit, but I suppose you're in Scotland at the moment, but that's close enough to the UK. We see reporting that Rishi Sunak, the current UK Prime Minister, it is easy to lose track of who is currently Prime Minister
third in a month
in the UK. But I've seen some reporting that suggests he's potentially more crypto friendly. Sometimes, I mean, that's what they said about Gary Gensler when he first was appointed head of the SEC. They said, hey, he's great. He used to teach blockchain courses. And, well, look how that's worked out. So hard to read too much into this. But however you want to approach it, just give us kind of the snapshot of how you see crypto regulation, not maybe for the UK, but maybe more broadly for Europe, if that's possible. Austin.
Yeah, so I think this is a very interesting space because, as I said, it is global, and cryptocurrency and the funds and the users of cryptocurrency can literally locate themselves anywhere. So I think you've got 3 different types of regulations right now. You've got those which are effectively banning it or trying its hardest to ban it, China, to lesser degree India, but there's a lot of markets which basically says, no, we don't want anything to do with this. But actually what they are doing behind the scenes is they're looking at how they can do their own government form of cryptocurrency, central bank cryptocurrencies. And they are investigating it, and then they're not excluding the possibility that it is going to be a major form of currency, but they don't want the major form of currency to be Bitcoin or Ether or somebody else's or Meta's new token if it creates one, or Google's new token, etc. They want to have their own version of that. So that's sort of group one, and they're usually very large markets that have the resources to do their own investigation into this. Then you've got those at the other end of the extreme, the Ecuadors or certain sort of Latin American countries, etc., that are trying to embrace it wholeheartedly and saying, look, we're beholden to the US dollar anyway. We have really very little control over our own economy because everything is tied to the dollar. Why not? Let's try and get some control over this, and we'll tie it to some form of independent money that our population can get with much easier access. It can be held as a good deposit against inflation, etc. So you've got a few markets going down that route, but they're usually very weak economies that can't work out how to break away from from the dependence on the dollar, for example. And then you got this big lump in the middle that doesn't really know exactly what to do yet, and that's the US, the UK, Europe in general, Japan, etc. And they're all approaching it with this sort of cautious model that says, we are keen for this to be developed, but we wanted to develop in such a way that it's good for us. And if I was in the US right now, if I was a regulator in the US, I'd be playing it very differently. They're basically going down the path that everything's a security. It means everybody is afraid of going into the US, that they all look at it very cautiously, so they'll stay away. So the US actually has a risk that it's not actually the leader of the pack when it comes to the development. And I think countries like the UK have spotted opportunities to say, actually, for once, we may not have to follow the direction of the US, because they don't have the same control here as they do. I mean, if the US, for example, decides to make some action with regards to the dollar, the whole world, shakes, but it can't do that with cryptocurrency. So I think the UK is saying, look, we could be a hub here. We can put in place regulations and conditions that will make it very attractive for cryptocurrency companies to locate here. We'll introduce appropriate tax structures and regulatory regimes that makes it possible. But that's all words, I would say, because Choise.com, as an example, we took us 2 years to get cryptocurrency regulatory approval in the UK. We started our application process in 2020, and 2 years later, we were the 13th company out of more than 300 that applied that actually got approval. And today, I still think there's only 30 or something like that. So on the one hand, you hear a lot of positive words, but behind what's actually happening, it's more words than it is actual practices. But there are some exceptions. Countries like Singapore, they really took this to heart and they put proper regulations in place. So companies are saying, okay, we hear what you're saying, UK, but actually, whilst you're doing that, we're going to go off to Singapore and see what they will do. So there will be some countries, I think, that are ahead of the curve, and they may not be the UKs, the USs, the Germanys, etc., or the Japans. They could be the Singapores or Lithuanias, or somewhere where they can actually put in place a proper regulatory environment and give proper tax returns and tax breaks and regulations, and people will feel comfortable with it. So it is a very difficult minefield right now with no, I would say, obvious outcome.
Yeah, thank you for that, Austin. Very, very well explained. And who knows, the journey ahead, as always, is uncertain, but that is part of the fun. Let's start to finish off then, Austin. I suppose, let's finish off by just, I'll invite you to, make the case for why people should use Choise.com. And maybe, I'm not sure if we've made this clear so far, but well, number one, who is your kind of target audience user or target market, if there is such a thing? And secondly, whereabouts in the world can people use Choise.com?
Thanks, Andy, for that opportunity. So I think that the key, I'll go back to it. We try to make things simple. It's estimated that there's about 300 million cryptocurrency users in the world. And one of the best places to make money is in decentralized finance. And I'm not going to go back into that conversation again about what it is and all those type of things. But it is incredibly complicated to use. And of those 300 million people, as I said, most of them are trying to make money. But it's also estimated that 49 out of 50 wallets are just sitting there with money in them, not doing anything at all. And that's a real shame. So I don't think it's because of fear. I don't think it's because people are particularly worried about certain aspects of the platforms or the what's actually happening with the money. I think it's a lack of knowledge. For example, a person who owns US dollars can now quite easily convert a US dollar into a US stable coin. And there are some very strong, high quality stable coins out there that are backed by real dollars. And then you can stake that stable coin in the same way as you can open a savings account. But the stable coin can earn you quite comfortably 8, 9, 10%, whereas a dollar account might be earning you 2 or 3%. I think it's just lack of knowledge. I mean, if I try to explain to my my colleagues who are not in cryptocurrency what is a stablecoin, it's a little bit difficult. And if I talk about, well, how do they make money? I mean, why does someone pay 9% for the stablecoin? It's a little bit difficult to explain. So what we try to do is we try to simplify everything as much as possible. And I think our platform right now is aimed at the type of person who's not looking to trade 6 or 7 trades every single day and looking for the next spot price and trying to see what's going up and down, but the person who says, I've got a few $1,000s, I would like to enter this world of cryptocurrency in the same way as I'd like to enter, some other industries for some savings, but I'm not going to put all my money into it. I'm just going to put a little bit of money in, and I'd like to see it grow. And that's the type of customer that could easily access our platform. They can access it from pretty much anywhere. There are, of course, some restricted countries like there are in any financial industry, but they can operate from something like 170 or 180 countries. And all you really need to do is open an account, go through a KYC process, and prove who you are using your passport or your driver's license, as you would with any bank account. And then you can get up and running very, very simply. You could open a savings account with as little as $10, but very few people do, of course. But you could easily put some fiat currency or let's say euros into our IBAN account. You can then use those euros to convert it into a cryptocurrency, and we can do all of that for you. We'll make it very, very simple. And then we can put it into a savings account that is very transparent. Where is the money going to? Exactly how the money is being put to use. And then you can get your money out like you can in any other bank account when the time deposit is up. Or you can even get your money out whenever you want. Actually, you just lose your interest that you were going to get if you take your money out earlier. Again, the same way as it would happen in a traditional bank account. So we're trying to bring it to a level that people understand. So I wouldn't say the Choise.com is the platform to go to if you really want to do 100 different trades a day. Go to the Binance professional trading platform. But if you really would like to just get into crypto, do a little bit of experimenting with crypto, we have, for example, on the platform, we have price predictions. They're free. You can get 5 different price predictions every day. You're free to use that service if you want to. And it's proven to be an incredibly successful platform in terms of its results. But we don't try and push that down people's throats. It's for them to experiment with. So we're there for the everyman who has a little bit of crypto. And as I say, 49 out of 50 wallets, they are in that space. They're just not using it. So that's the sort of the target market for us. And that's really what we're going to be pushing for over the next few years.
Thank you, Austin. I like it a lot. I wish you all the best with that journey ahead. Thank you so much for coming on the show. All the best, and bye for now.
All right. Thank you. Thank you very much, Andy.
All right, there you go. That was Austin from Choise. I enjoyed that. Very nice guy, very articulate. I suppose you'd expect that for someone who spent, what did he say, 25 years in insurance. Definitely time for a change after that. And yeah, I mean, I've had a look at Choise.com and it looks pretty good. It looks good. So I hope they do well. And of course, the link will be in the show notes, but Choise.com, and the website is simply CHOISE.com. So yeah, that's the place to go. Please do go and check it out. And hey, we've reached the end of today's show. Thanks for listening, team. Please remember to subscribe to the Crypto Conversation in whatever podcast app you are using. But we'll see you real soon. See you next time. This was the Crypto Conversation for Brave the New Coin. See ya.